All right, let's talk a little bit more about the markets. Our next guest seeing potential for a rotation back to high quality, reasonable growth stocks. Let's bring in Montagne, portfolio manager with Gradient Investments. Marianne, welcome. Good to have you with us. Can stocks make forward progress with rates rising the way they have been over the past month or so?
Yeah, I think there's certain stocks, we're always stock pickers, so there's certain ones that can do well even if the two-year rate is heading higher. And a few of them, they're durable growth stories. So one that we hold in both our core growth and value portfolio strategies is UnitedHealthcare. And this is a healthcare insurer. We think we can get as much as a 25% increase in the value total return, that is, over the next 12 to 18 months. And part of the reason is because their Optum growth, which is healthcare technology direct to the consumer, is now about 50% of their earnings. It's a fast growing part of their business. And, they've been beating revenue and earnings estimates quarter after quarter. We think they'll continue to do that. And we just think that's a great story. It's also Minnesota-based, as we are.
So you call that a growth and a value stock, or it's in both
Absolutely.
of your portfolios? So you like the price and you like the growth. Another one that's on your list is Constellation Brands. That's much more a sort of consumer focus. We've been talking a lot about the consumer today.
Yeah, in fact, today is the opening day for the Consumer Analyst Group of New York. It's about 660 people in attendance. I used to be president of that group. And I'm quite familiar with the consumer side of things. Constellation Brands stock today. What's going on with Molson Coors, and they've seen some acceleration in that fourth quarter for Molson, and we expect to see that in the quarter that ends February for Constellation. So with a 3% yield, we think that total return of 17 to 18% is likely over the next 12 months. Here we're looking for volume growth to accelerate to the 6 to 6.5% range. That's a very healthy number in consumer land. And that's going to be during the important summer months. And in addition, they should see high teens EBITDA growth as their cost pressures are alleviated and they get some leverage out of their expenses.